Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought Gamestop at 400, didn't you? To the moon, baby, to the moon.
Okay. Get ready to own the chaos in 3,
2, 1. God damn it. What's up, everybody? Welcome to the chaos. My name is Brad. The stock market's crazy and chaotic, and my media sucks. Why does it do that? Some days it's great, some days it's not. I don't know. I don't know why. We'll figure it out one day. One day when it actually matters to me, or what the hell? Maybe it'll just be a thing. Maybe it'll just be a thing that we make fun of. Because there's always tech issues with this goddamn channel. What's up, everybody? Welcome to the chaos. Before we get into anything, as always, let's set up the starting five. We got Jay Chocolate, who is first. Hell yeah, bro. What's up? Alan, Pastor David Hopper, G Money, Funny Pranks Gone Wrong. You guys are the starting five. March Madness is upon us. The NCAA has officially completed their bracket, which I'm super pumped for. Nobody cares about your bracket. Everybody loses, but that's okay. It's still fun. Speaking of sports, I don't know. We'll get into the finance. Okay, we'll get into the stock market. We'll get into all that. But this actually kind of relates. Is it a coincidence that Bitcoin tanks and then Tom Brady announces he's unretiring from the NFL? I mean, if you didn't hear it, you heard it now. He just announced it right before I went live. Tom Brady is now going to be playing his 23rd football season, which obviously smashes so many records just with that alone. But the interesting take here, or interesting tidbit information, I should say, is that somebody purchased Tom Brady's his last football? Who was it? Tom Brady's last touchdown ball yesterday, or not yesterday. His last touchdown ball, somebody purchased for $518,000. I'd imagine that's probably worthless at this point. Somebody should probably check on that guy. Can you imagine? Like, how do you recover that loss? You don't. $518,000 that you paid for Tom Brady's last touchdown that he threw. And now you might as well play with it with your son or your daughter in the backyard, because that's about all it's good for. Can you believe that? Oh my God. I mean, I guess nobody should be surprised that happened, but I just feel for somebody who spent that kind of money on something, and then Tom Brady's like, hey, I'm back. Sorry, bro. But maybe Bitcoin just wasn't cutting it out for Tom Brady, and he felt like he had to come back for another season. Who knows? Unbelievable. It's believable, but it's unbelievable. Crazy. So that's right. That's right. That's right, Ivan Broski. Man. Yeah, it's crazy. Crazy time in sports, but also a crazy time in the market. Guys, we're getting into our slow period now. The earnings season has pretty much come to a close. And so we're just going to get into the meat of things, but it's not without storylines, right? Because this week we heard from the Fed about how they, we didn't hear from them. We knew it, that the Fed has finished their quantitative easing. And so now they're going to be speaking about quantitative tightening. And that is the headline this week. The Fed, Jerome Powell, interestingly enough, signaled with unusual clarity during his most recent congressional hearing or his testimony that they planned and he has supported a 25-point rate hike this week. And so we're going to hear from them in the bank during the bank's March 15th, March 16th meeting. I'm not saying that Powell has had a history of surprising us, But you would think that maybe there would be more consideration for a 50-point rate hike this week, just given the way the CPI numbers came out, right? 7.9% CPI last week that we heard for the month of February, and highest we've seen in 40 years. A lot of it had to do with everything that was going on with the war in Ukraine, but there were still, fiscal policy, I don't want to say snafus or what have you, but there were some things that we could have done here in the States. But there's nothing that Jerome Powell can do from his side of things to solve supply chain problems. And that's really where the big root of it all is, right? The supply chain was one of the big reasons why we saw so much inflation over the last 6 months. And that's obviously exacerbated now with sanctions being put on Russia. I think it's 30% of the world's corn and wheat come from Ukraine and Russia. Isn't that wild? 30%. That's huge. Now, a lot of people were kind of like, oh, whatever, not a big deal, right? Because of energy. It was still, Russia provided 10% of the world's oil supply, right? So while that's a lot, it's still not something that I think the rest of the world can't handle. But 30% of the world's wheat and corn, that's crazy. I didn't realize that was that big of a number up until I was, preparing for today's show. I knew it was a big number. I didn't realize it was 30%. So a third of the world's entire wheat and corn supply comes from that region of the world. And obviously we're not going to be getting that, which is why we've seen some of those commodities go absolutely insane. Stands reason to believe we're probably going to see that continue somewhat. So I think that that's going to be something to certainly watch out for. And then we have the rate hikes, as I had mentioned. Just to get into this a little bit more, Jerome Powell had mentioned, just a quote here, the bottom line is that they're going to proceed with a rate hike at 25 basis points, but he said they will proceed carefully as they learn more about implications of the Ukraine war, which could take some time. So there's a lot of, talk around raising rates every month, every Fed meeting till the end of the year. That would leave around 6 or 7 rate hikes, which obviously wouldn't bode well for high growth stocks, especially stocks that or companies that are reporting losses. And we've seen that time and again. I don't think that happens, to be honest with you. Just by those words alone, let me read those again. This is a quote by Jerome Powell. The bottom line is that we will proceed, but we will proceed carefully as we learn more about the implications of the Ukraine war. Now, obviously, we saw those CPI numbers at 7.9%. And so there is, I guess, a possibility that the 0.5% increase could come into play. But given those notes, I don't think we get any surprises from Jerome Powell. I really don't. And let me know in the comments what you guys think about that, because I just don't see that happening. The reason being is just because of that. It seems as if to me that I'm reading that as we're going to raise rates. We're going to go up 25 basis points in March, and then we're going to wait and see. We got to wait and see what's going on with Russia and Ukraine. There's not a whole lot that the Fed's going to be able to do when it comes to supply chain issues. So why is the Fed actually going to act on things that they can't control? And I think that's the line that a lot of people are having a hard time drawing. Of course, they can raise rates, and they can, tighten up, the balance sheet and all of that. And that's something that they're still going to do. Like, that's not going to not happen. But I think the speed in which people think it should happen based off of the things that are going on outside of the Fed's control just doesn't seem to make any sense. So I think that what they're doing is absolutely right, because what happens when quantitative tightening and rates go up and then all of a sudden the supply chain eases up, right? And I'm not just talking about Russia, Ukraine. I'm talking about everything. What if that happens? And I think that that's what they're weighing out. I think it's, we could raise rates and we could go full stop here, pump the brakes or slam on the brakes, and we'll go up a 0.5 point. But then what happens when the supply chain gets eased and demand, starts to fall off a little bit? Because you got to remember too, we're still seeing a rate of demand right now that is coming off of COVID restrictions and that sort of thing. So when that starts to level off or plateau, which I think it will, and supply chains ease, then you're going to run into a really serious problem with growth. And you're going to put us into a recession, hands down. Like, that would happen. So I think that there is definitely a balancing act, and the Fed is in a really tough spot. However, I think that he's done a really great job all things considered. I mean, I don't know if there's anybody that could have done better job or would have done things any differently than what Jerome Powell has done. I think that maybe if there's, I mean, hindsight's 2020, probably shouldn't have gone with the transitory conversation. However, I don't know if anybody saw supply chain issues continuing to be a problem up until this point, but they did everything that they were set out to do, right? Their main focus was unemployment. Unemployment is at an extreme low. I think 3.8%, 3.9% is where unemployment is. And that was one of their goals as a part of their fiscal policy. And they've done that. So I don't think there's anything that they could have done really significantly better that would have put us in a different spot than where we're at today. I just really don't. And, if there's something, if there's really something that you think they could have done better, then let me know. But I don't think that there is. Because if you tighten too fast, you're going to throw us right into a recession, and that's not good either. The USA produces 30% of the world's corn too, says my paper route. I did not know that. I think we produce like 30% of the world's rice as well. I was just going through a bunch of numbers on commodities and all that. So, but the rice, we have a lot of rice apparently, which is interesting. I thought that a lot of Asian countries, Southeast Asia, would have had a lot of well, they probably do, but yeah, like Arkansas, shit ton of rice. There's a huge rice state. They grow a ton of it. I saw somebody ask about Fat Man Zoom. Where is that at? Somebody asked about Fat Man Zoom real quick before I get into the next topic. What is the Los Angeles trip with Fat Man Zoom? So a little bit of a change of plans. Fat Man Zoom is in Los Angeles right now. He's going to see a specialist on his glioblastoma, and he's going to go through some testing, and it's kind of like a tentative thing. So we both decided that it didn't make a whole lot of sense for me to go out there, especially if he was just going to get some tests and come back and get a second opinion at Duke, which is in Raleigh. So I'll be going down with him to Raleigh, but it didn't make a whole lot of sense to fly out there with him if he was just going to come back in a couple of days. I think that if there's something serious going on, then maybe those plans would change. But right now he's going to go out there. He's going to be out there for a few days. He's going to come back. We're going to go to Raleigh. He's going to get a second opinion there, and then we're going to move forward with what's called a primary care team, and that's where we're going to go from there. So not much has changed. He's just doing his thing. He got his first tattoo with his daughter on Friday, which is pretty awesome. You guys want to check that out? We'll be putting that on his channel, so go follow him. Yeah, that's the latest update on Fat Man Zoom. Not a whole lot to report there. Okay. Let's see here. All right. So the next topic of discussion is PPI numbers. Speaking of inflation. So PPI numbers, expected PPI, it should be around 8.7% for February, up and already higher than expected 8.3% last month. So no surprise, right? We're going to see huge producer price indexes. So that's going to be a thing. I think that they probably come in line with that. That's a pretty high number to project. I don't know if it's right now we're seeing, the PPI expectations go up because it's like, well, if we continue to go higher, then maybe one day the economy is actually going to beat that number, right? They're going to come in lower. So let's just keep shooting it higher in hopes that they report actually lower. And that's kind of what happened last week when we got from CPI. They came in pretty much in line with what expectations were, but I think it was because they already set the bar pretty high, and I think they're setting the bar pretty high here. My hunch is in anticipation of maybe they beat that number. So hopefully it comes in lower. I doubt it. 8.7% is the expectations for PPI. So that is something to consider as well. We do also have some earnings this week, and that's what I wanted to get into. Guys, put some tickers in the chat as well. I'm going to go over some tickers that you guys are looking at or that you're looking to potentially buy this week. What are you buying? Or are you not buying anything? Or are you selling? Let me know in the comments below what you guys think about everything that's been going on. Does it make you want to buy? Do you feel bullish? Do you feel bearish? And why? Don't just be like, yeah, I'm bullish. Why? Give me a good reason. Put some context to it. But FedEx does have earnings this week. They'll have their earnings on Thursday after hours, which I will be live for. If you guys aren't subscribed already, please make sure you're hitting that thumbs up, subscribe, and hit that notification bell to get notified when I go live at 3:45 p.m. on Thursday to give you the reaction to FedEx. I also go live Monday through Thursday as well at 3:45 p.m. Eastern time. So make sure you guys are tuning in then, and we'll talk about whatever's going on in the market that day. But right now, the expectations for FedEx on Thursday are at $4.65. And then average estimate there is at around 24 billion. So 23.44 billion dollars is the expectation for revenue. And the big story here is going to be because with inflation, right? Increased wages, overall costs, especially fuel costs. That's going to really be interesting to see how FedEx plays out for them, because how much are they going to be able to pass on to the consumer? And that's what we're really going to be focused on with FedEx here. I think that I don't know the answer to that at this point. Usually I have a pretty good hunch, right? I like to make a good guess as to what I think. And I got to be honest, I'm a little bit nervous for FedEx at this point. You know, I think that there's a lot to be nervous about as far as this is concerned, especially if you're in a UPS or FedEx, any one of those companies, because of the cost that they're taking on right now and how much they're actually going to be able to pass on to the consumer. I don't think they're going to be able to pass on enough to be able to make up for that. So I think that there's a really good chance that that FedEx could miss earnings per share based off of those reasons alone. So I guess maybe I am making an assumption or a prediction here that I think that FedEx could miss earnings per share. I think they can miss their earnings. I don't think that they miss revenue. I think they bring in a ton of money. So the revenue is something that I think that they should come in line with or maybe beat, but the earnings per share is going to be really tough here, which could impact their outlook as well. That being said, I mean, you look at how far down FedEx has come, and you could make the argument that this is potentially priced in. I mean, their price to earnings right now, the forward price to earnings is at 10 times next year's earnings. So it's a really attractive level. It's really, pretty cheap from a fundamental standpoint. It's come down to a really low level in which I would say that it's probably worth scooping up, even if they do miss earnings. But I think I would just wait till after the fact, because even if you miss like a run up on earnings, let's just say they come in and smash earnings per share. They give a really great guidance. Everything's up. People are taking the costs away from FedEx, or consumers are. And this just goes flying, right? Because let's just say it hits 230. That's another 5 to 10% move off of earnings. That's still way off of their highs, which is all the way up at 319. So even if you miss the initial run up on earnings that may take place on Thursday, I think that the risk reward isn't necessarily worth it to be owning this beforehand because of the things that I'd said prior. So you get in, maybe if it breaks up over that 228.5 of resistance, let's just say it does when earnings come out, you're still really in a really good spot to buy it there, only because we're the 50-day moving average, which is represented by this yellow line, sitting at 238.5. You got the 200-day moving average all the way up at 256.5. I just think that, the risk reward does still not quite worth it to me for FedEx, just considering the environment that we're in. And so I would just hold off on this until we get earnings and see the reaction there, because the risk doesn't seem quite worth it to me. Again, you can make really good points as far as how cheap this is. 4 PEs at 10 times next year's earnings. That's stupid. That's stupid cheap. But there's a lot of risk here still. So yeah, I think that's something that I would certainly, just keep an eye on if you guys were curious about FedEx this week. That's kind of like the biggest one as far as earnings are concerned. Unless you guys actually still care about GameStop, which their estimated earnings per share are at 84 cents, which is kind of mind-blowing. I think that they missed that number horribly. Their average estimated revenue is around 2.22 billion. GameStop is one that I certainly would stay away from. You guys know that I would stay away from this. I don't think I have to explain anything to you here, but I can't even believe the stock's still at $93. I think that they come in and they miss earnings. I wouldn't be surprised if they actually came in and reported negative earnings. I would not be surprised in the least if they came in and reported negative earnings. Although I believe last time they reported earnings, let's see, Yeah, last October, the last quarter they reported it was a loss of 52 cents, and the expectation now is at 84. No way. No way. I don't know who came up with that number, but I don't see how they beat that. I don't see how they come in profitable. Nevertheless, 84 cents. I don't know if Yahoo Finance has got their numbers wrong or not, but somebody cross-reference that for me. I just pulled that off of Yahoo Finance. If that number is true, where the expectations are at 84 cents, somebody is out of their ever-loving mind. There's no way. I don't know how that happens. We'll see. I mean, I guess I could be surprised, but I would be shocked if they came in and reported positive earnings here for GameStop. Let's see here. Futures are nicely green, says Bart Dom. What's up, Bart? Good to see you in the chat. Yeah, futures are nicely green. So the S&P is up 28 points. The Dow's up 239 points, good for almost 1%. NASDAQ's up 78 points. And then crude oil is WTI crude's down about 2.5%. This means nothing, though, just an FYI. But that's just where we're at right now. You get a lot of low volume run-ups like this, and I mean, there's no good reason why the futures should be up that big. I think that's probably going to open the morning flat, but we'll see. Maybe there's something good that comes out. Okay. Oliver Thorpe. I like this. I was buying a little of Meta, PayPal, Sofi, and SPY, but holding off on anything else now until we see things turn around as things have been dipping, even if I have to wait a few months. I think this is a good call. Let's just break this down here a little bit. So you have Facebook, Meta, platforms, PayPal, Sofi, and SPY. I actually have Sofi myself. I took a long-term call on this one. And I think that Sofi is just ridiculous down here. It's at 855 is where it closed out on Friday. It's down 10%. This is a look. I understand why it's down here. And one of the big reasons is because they are reporting for a loss. We have rates that are going to be going up. Interest rates will be going up this week. And these are the type of stocks that are going to react the most to it. Stocks or companies that are going to be reporting for a loss. SoFi is one of them. However, the growth story here for SoFi is significant. And I think that trying to time the bottom here, just given how much this has come down, doesn't make a whole lot of sense. It's very rare that I'm going to buy something where it's like catching a falling knife personally, but I actually did buy this one because I do just want to be in at this point. I'm not trying to time it. I'm just going to wait around. I know it'll come back. Seeing this at 855 makes no sense to me, and I'm just going to hang on for the ride once this finally breaks this downward channel. The growth story is ridiculous. They projected 500% growth increase year over year for the next year, which I think is phenomenal. So I'm just going to continue to hang on to SoFi. I like this buy here as well. A couple other ones, though, that has still gotten beaten down that are reporting positive earnings or reporting for profit is PayPal. That's one of them. This has been interesting. So 92 and a quarter, thereabouts. It's got about $10 to go before it's now revisiting the pandemic low. Let me rephrase. The pandemic low. So when the stock market crashed in March 2020, 8207 was where PayPal, that was the lowest it came down to. Here we go, 8207. Just last week, it hit 92 and a quarter. That is wild. PayPal's a buy, period. We don't have to say anything else. It's a buy. It's come down too far. Did it deserve to be punished on the last couple of quarters of earnings? Yes. However, it's just come down too far. It just has. Next, with Oliver Thorpe's list here, he's got Meta as well. I agree with this one too. This is a company that's trading at 15 times next year's earnings, and it brings in $40 billion of cash flow every year. $40 billion of cash flow every year. Let me repeat that one more time. $40 billion in cash flow every year is trading at 15 times next year's earnings. That is unbelievable. PayPal, Meta Platforms is a buy. Where could it be one, though? Do you just buy it here? I think you could buy it here and you'll be fine, no matter where you get it at. If you want to be a little bit more tactical with it, I think you could look at the support around 173.5. Maybe it has a little bit more downside left into it. I actually looked at 173.5. I had to go all the way back to October of 2019 to find that support. You can kind of see back here where it kind of acted as a support in August of 2019, and then again in September, October of 2019. It started to really ramp up into the end of 2019, and then obviously we know what happened after that. And so now I think that we're starting to threaten that area. So I think there's a potential, there's potentially a little bit more downside for Facebook. But look at this. I mean, this is the daily chart, guys. We're seeing how this has been oversold since the beginning of February. This has not recovered. It's been an oversold territory on RSI since the beginning of February. So for me, I think that this is an opportunity for Facebook. If you have a long-term approach on this, and even if you're looking at this over the next 6 months, I think that Facebook's a buy here. But again, like I said, if you wanted to try to be a little bit more tactical, I think that 173.5, maybe watch that area to see if it bounces off of that before taking a shot at it. But yeah, a great list there, Oliver Thorpe. Thanks for playing, bro. Appreciate you. Thanks for playing. Oh my God. Alan, do you even know what you're saying right now? He says FedEx drivers are lazy. Where's Daniel Camarena right now? Go follow Daniel Camarena on Instagram. That dude, if you guys don't know Daniel Camarena, he shows up almost to every live stream, and he's the hardest working individual I think I know. I don't even know him. maybe it's just a individual issue with you, Alan, and FedEx. Daniel Camarena is where it's at. Shock City Rocker just reached 12,500 shares of Sofi and still adding. Holy shit balls, bro. That is wild, man. Kudos to you. Manny R says, Dutch Brothers have lockup expiration tomorrow. Can you please have a look at the chart? Thanks. For sure. Let's take a look at that. So Dutch Brothers, by the way, I love the growth story here. Dutch Brothers, I think, if you guys aren't familiar with them, and I wasn't up until it was a while ago, maybe a couple years ago, you're going to laugh. It was Dutch Brothers was on Undercover Boss. And ever since then, I've been actually just doing research on them here and there. I haven't taken a huge deep dive on them, but they just went public back in September. And they've been doing a really good job. Their last earnings wasn't like fantastic, but it wasn't bad either. I think they're just struggling like everybody else as far as rising wage costs and that sort of thing. However, if you guys aren't familiar with them, they are a Pacific Northwest coffee company. It's very similar to Starbucks, but they just have a really good business model and a really good outlook. And the growth story here, I think, is enormous. So you look at this, the lockup period's coming up. There's a really good chance that this may sell off after the lockup period. So I think that this one, while will be great long term, in the short term, I think we could see a little bit of trouble from this one. There's always issues. There's always some volatility when the lockup period is over. You have angel investors that have been hanging on to this thing well before it went public, and now they have the ability to sell and make a bunch of money hand over fist. I think that this is a potential possibility for something like Dutch Brothers. However, what I will say about them is that of all of the IPOs that are all the companies that went public in 2021, this is one of the very few companies that is still positive since going public in 2021. You would have made more money buying Dutch Brothers than buying Robinhood or Coinbase after IPO or Rivian. Holy shit. Right? I mean, I think that's saying something. So I think that you'll see a little bit of volatility because of the expiration. Nobody likes dilution, and in effect, that's essentially what it is. And so I think that there's a possibility that takes place. However, if you look at the chart here, I think that maybe this has the possibility of only coming down as low as maybe around 43.60. That's an area of support that I kind of see there. Yeah, I like this one. Let's see. Right around there. So we'll call it 43.25. 43.25 looks like a pretty decent area of support. So if it falls below that, there's also the 52-week low here at around 32.11 or 38.11. Sorry, 38.11. It's not a 52-week low. Sorry, the 52-week low was on IPO day at 32.42. I seriously doubt it comes down that low. So watch for these two areas, at 43.25 and then 38.11 are two spots that I would watch for a potential retest if there's a negative effect or a negative impact on the lockup period expiring. Most cases it is. And, you know, again, like I said, this is a form of dilution and nobody likes dilution. Nobody. but I like it. I like the company, and I think it's a great longer term hold. If you're putting in a long term portfolio, you have my blessing. Okay. You guys are great. Philip Stroh says buying more gold. Interesting. Yeah. So the reason gold's going up, and it always does this during times of war or geopolitical issues, economic concerns. Gold hit an all-time high, not all-time high, a 52-week high last week. And I think that there's potential here for Philip Stroh for this to go up if tensions increase. And we saw Iran bomb a U.S. consulate in is it Erbil? I'm probably pronouncing that wrong. Erbil in Iraq last night. Long range missiles hit a U.S. consulate. Nobody was hurt. Nobody was injured. Nobody died. However, a little bit of an act of aggression on some long range missiles, just hitting a U.S. consulate by quote unquote accident. They weren't going after a U.S. consulate. However, somehow they hit them. Yeah. That said, I think that there is potentially, this is Barrick Gold. This is something that I think that would be something that I would go after. It is a minor. However, Barrick Gold has really followed the price of gold pretty closely for the most part. This is a really great run company. The CEO is amazing. And so this is one that I would go after if you guys are looking to potentially expose yourself to some gold or some metals. This is the route that I would go. Of course, you could go after an ETF like GLD, for example. That's the one that a lot of people go after. It's a spider ETF. So that would be one that maybe would be worth checking out. However, I think that GOLD is probably my gold play of choice. But always go after JNUG if you want something that's leveraged. Nobody wants that. So there you have it. Danny Alvarado says Dutch Brothers is really good. Lines are huge here in Cali. Yeah, that's what I hear. I need to get out to one. If I get to California, I'm going to have to find me a Dutch Brothers. ChargePoint Sammy K says ChargePoint's been moving in the green the past week or so while most growth stocks are getting beaten down. Do you think that we can expect a bull ride, especially in the coming months? It's a really great question. I'm going to be putting a video out on this this very topic. So why is ChargePoint making the big move? One of the big reasons is because of this move away from fossil fuels, especially in the U.S. And Joe Biden and the Biden administration have made that very clear over the last several weeks that they are pushing to renewables. And there's a lot of conversation about, the squeeze that we're seeing in oil and fossil fuels and how it is potentially creating more demand for renewable energy and the sort. EVs obviously included in that. We saw some really good EV stocks move as well. You could look at something like First Solar that also made a monster move. You could look at Sunrun also. What is that? What's Sunrun? Ticker, there it is, run. The ticker just escaped me. That also made a strong move. So they're all making really good moves. My biggest concern here, and I'm going to give the counter argument to this, right? I mean, you have even Elon Musk coming out and saying, we should drill for some more oil. We should produce more oil. And for that dude to be like, hey, we're not ready for this. That's saying something, I think. And that's where I kind of want to take the conversation as far as renewable energy is concerned. We already saw that nickel limited up last week, right? It got halted last week because it had an insane move because of the fear of nickel basically not being available for EVs to be made. Nickel is a very important component for lithium ion batteries that are put into EVs. There's a lot of issues when it comes to natural resources, and that was before the war in Russia and Ukraine, right? And lithium supply. There's just not enough lithium in the world right now to be able to keep up with demand on EVs, at least what they're projecting. And so I think that there is going to be a real problem here, a day of reckoning, if you will, if we keep going down this path of, let's just throw oil out the window and we're just going to go all in on renewables, because I don't think we're there yet. We don't have enough people mining for this stuff. We don't even know if there's enough in the earth yet. So I think that there's going to be a big challenge moving forward. Now, what's the timeline look like? I think that's something that I'm still trying to wrap my head around and trying to figure out, how much time do we have with the resources that are available before it starts to become a serious problem? And we're already seeing that when it comes to rare earth materials. And what I mean by that is the chip shortage, right? And that in and of itself is a problem. I'm just talking about other stuff that goes into making an EV. And this all comes back down around the charge point, because charge point's also going to be lumped into that industry, that challenge, and that problem. Now, they come out and figure out a way to solve this issue, then I think that we're fine. But I don't think we're there yet. I don't even think we're close. So I would just be cautious. This could be a temporary rally for something like a charge point or Sunrun or First Solar or Blink charging station, or even some of the other ones that have been making some pretty strong moves, because I think that we're seeing a really an issue here where there's going to be a lot of demand that goes towards renewables, but I don't think that industry is ready for the demand that's going to be coming for them, especially if oil and energy costs continue to go up. Definitely want to get your guys' thoughts on that as well. But that's kind of my theory. But, I know that was a really long answer, but you got me kind of going on that because it's something that I've been thinking about over the last week about creating a video on. So yeah, definitely want to get your guys' thoughts on that. Enphase as well. Yeah. Enphase also made a huge move, as the same type of move and same types of reasons. Let me pull that up. ENPH. I got a buddy of mine that bought this down in the 126, I think. Enphase 126. And he's making a killing right now. But yeah, same thing, same reason. All right. Okay. Oliver Thorpe. I know we normally cover U.S. stocks, but you check out some UK stocks, as many are massively down over the last few weeks due to the Ukraine situation. I'm sure that I don't know of any UK stocks. You'd have to throw some out at me. If I had some off the top of my head, Oliver Thorpe, I'd certainly would give you some time on that, but I don't know. I don't know much of any. Victor T, this is a good question. What's up, Victor? With Apple and Google clamping down on tracking on the Facebook app, do you see Facebook moving past this particular issue? Yes, I think they'll figure that out. And that's why I think that, regardless of some of the issues that they're running into and the challenges that they're running into with Google and Apple, they're still bringing in $40 billion a year. Like, regardless of all of that, Meta Platforms is still killing it. And, the price to earnings does not reflect exactly what's going on here. Have they lost a little bit of focus with the metaverse and everything they have going on there? That may have impacted some of the growth story here. Yes, but that's what they're trying to kind of like get ahead of, right? Like, if this is the road they're going to be going down with Apple and Google and some of the other players here, then they're using the metaverse to try to pivot a little bit because of some of the challenges that they're going to be having. Now, that's the big part of their business, and they should continue to focus on that. And I don't think that they should leave that at all. And I don't think that they're saying that. And people can say whatever they want about Mark Zuckerberg. And yeah, I have my own opinions about the guy too. However, the dude runs a business extremely well. And so I think that that's going to be something that I would continue to hang my hat on. There's no doubt in my mind that the stock is going to be fine. I see a lot of people saying that it's going to be MySpace 2.0, and I just couldn't disagree more. I really couldn't. I saw this question. Russia and Belarus make 75% of the world's fertilizer. Thoughts on Scott's Miracle-Gro SMG? I actually took a look at this. Somebody asked me about this last week as well. I don't know. This could be a possible mover. The chart is fugly though, right? It hit 52-week lows just last week. I don't think that there's anything that I would that would be screaming to me to go buy this up. Like, I wouldn't be running to go buy this up. I think I would wait to see if there's some sort of rebound. Maybe if it gets back up over resistance around 126.25. I mean, you can tell that I've been having my eye on this as well. But it's been downtrending for a while. I mean, ever since spring of last year. So we're talking a full 365 days almost that this has been downtrending. So, the numbers just aren't there. Obviously, there's a lot of costs associated with this as well, with their business. And I don't know. I get what you're saying as far as, the fertilizer conversation. I just don't know what the answer is there. Manny says NTR, MOS are the best fertilizer ones. I think NTR and MOS could certainly be that. I don't know much about those companies in particular, but you can see the moves already kind of taking place here. So I would say there's a lot of risk involved in buying something up this high, but you never know. It can continue to roll, I guess. 75% is a lot of fertilizer. That's a lot of shit. Okay. Housekeeping item here. If you guys are not part of the Chaos Crew, I am adding more value to our Chaos Crew as of this week, and that is to roast some of your portfolios. So I'm going to be doing some portfolio reviews. I'm going to actually be making them public videos on portfolio reviews, but they're only going to be for our Chaos Crew. So for those of you who are on our level 2 crew, you guys will be able to submit your portfolios so that I could review them, and you can get my 2 cents on those, and I'll make those videos. It's going to be great content. I'm sure it's going to be a lot of fun. If you guys want to be a part of that, though, you got to be a part of the crew. So hit the join button next to subscribe. You can select level 2. It's going to be exclusive level 2 content. Sorry, let me rephrase. The content is going to be based off of those who are in level 2. So if you want your portfolio reviewed, go check out the level 2 crew. Would love to have you guys in there just to help support the channel and everything you see behind you as well. But that's going to be something that's going to be really fun. Just another value add. I'm always trying to over deliver here. And I think that's going to be something that a lot of you guys will really enjoy. So you want to be a part of the Chaos Crew. You get a watch list every single day of the week as well. I put it out before the market opens. And yeah, it's going to be great. So hit the join button next to subscribe. If it's not available to you, if you can't see the join button there, you can also go to ownthechaos.com. The link is in the description as well. Okay. Any thoughts on DocuSign and Shopify? I think that Shopify and DocuSign are going to have rough roads ahead of them. Shopify is still very overvalued from a PE standpoint. I would buy Amazon over Shopify. And DocuSign had really not great earnings. I think the growth story there is pretty much leveled off. And DocuSign will be a buy at some point. The company's too good to not get bought up at some point, but I think that I would stay away in the short term. Okay. That's going to do it for me, guys. Thanks so much for tuning in. I certainly appreciate it. It's going to be probably a little bit of a slower type of week, but you know me, I'll be here. So hit that subscribe button, hit that like, and I'll see you guys tomorrow at 3:45 p.m. Eastern time. So hit that notification bell as well to get notified when I go live, and I'll see you then. Thanks, guys. Appreciate you. See you tomorrow. Bye.